The US job market has just sent out a major warning signal about the state of the economy, and it's got everyone talking. But here's where it gets really interesting. The latest employment report from the Bureau of Labor Statistics reveals a bleak picture of the current economic landscape under President Donald Trump. The numbers are in, and they're not looking good. Just 22,000 jobs were added in August, a drastic drop from the expected 76,500 new roles. And if that's not enough, the economy actually lost 13,000 jobs in June, the first time that's happened in nearly 4 years. The unemployment rate has also risen to 4.3%, the highest it's been since 2021. So, what's behind this sudden downturn? Experts point to a combination of factors, including the weight of tariffs, stubborn inflation, and a decline in America's immigrant workforce. But that's not all. The data also shows that younger Americans are struggling to find work, with the unemployment rate for 16 to 24-year-olds climbing to 10.5%, the highest it's been in nearly 4 years. And recent college graduates are facing serious challenges in landing a job, with some even suggesting that artificial intelligence may be playing a role. The situation is so dire that some are calling for the Federal Reserve to lower interest rates, but others argue that this could have unintended consequences. As the debate rages on, one thing is clear. The US job market is in trouble, and it's going to take some serious effort to get it back on track. But here's the question. What do you think is the main cause of this economic slowdown? Is it the tariffs, the inflation, or something else entirely? Let us know in the comments. And this is the part most people miss: the impact of immigration policy on the job market. The current population survey, which underlies the unemployment rate, is not designed to take into account sudden changes in population, including changes to immigration policy. So, what does this mean for the future of the US economy? Only time will tell, but one thing is certain: the road ahead is going to be bumpy. The dollar has weakened, gold prices are soaring, and investors are getting nervous. It's a complex situation, but one thing is clear. The US job market is at a crossroads, and the decisions made now will have far-reaching consequences. So, what do you think the Federal Reserve should do next? Should they lower interest rates or hold steady? Let us know in the comments. The situation is controversial, to say the least, and there are valid arguments on both sides. But one thing is certain: the US economy is in a state of flux, and it's going to take some careful navigation to get it back on track. The youth unemployment rate is more than twice as high as the national unemployment rate, and it's a stark reminder of the challenges facing younger Americans. The employment-to-population ratio for foreign-born workers was 63.5% in August, up slightly from July. But the drop-off in the foreign-born labor force can be attributed to people refusing to answer surveys or not indicating their nativity status. The labor force participation rate moved higher, ticking up to 62.3% from 62.2%. But the increase in those unemployed was largely attributed to those who re-entered the labor market and are searching for jobs. The median time looking for work slipped to a 3-month low, a bright spot in a generally weak jobs report. President Donald Trump is on a mission to make American manufacturing jobs great again. But the effort is off to a slow start at best, and at worst is backfiring by causing job loss. The US economy is in a hiring slump, but Commerce Secretary Howard Lutnick signaled an optimistic note on America's job market, saying that tariffs will incentivize manufacturing job growth. The annual growth in average hourly earnings was 3.7% in August, a slowing from 3.9% the month before, and employers' continued focus on wage containment amid a slowing economy may lead to a further deceleration in wage growth. The US dollar index sank 0.75% on signs of a slowdown and future rate cuts, and gold prices jumped 0.9% and hit a fresh record high. There were more industries that lost jobs last month than those that gained, according to the government's latest tally, and investors are expecting the Federal Reserve to lower interest rates at each of its 3 meetings the rest of the year. The CME Group's FedWatch tool showed an 87.8% probability that the Fed will reduce its benchmark rate by a quarter point at its September 16 to 17 meeting, and the odds of further rate cuts the rest of the year also went up. Friday's jobs report painted a miserable picture of the labor market in practically every metric, and it's got everyone wondering what's next for the US economy.